Welcome to the Corporate Venturing Insider Series, where I interview top practitioners in the CVC world and learn with you the best practices and golden nuggets that they have accumulated over their career. In this episode, we will be learning from Stephane Longuet, Managing Director at Convivialité Ventures. Stephane, could you take a few minutes to share your story and how you got to where you are today?
Yes, sure. Good morning, Nicolas. Good morning or good evening, everyone. Many thanks for hosting me today. It's a pleasure to continue the discussion with you, Nicolas, about corporate venture capital. So I came to corporate venture capital by coincidence. It was not planned at all. And because I don't have any background in private equity, investment banking, or venture capital, I have some finance background, but I didn't intend to work for a CVC or to create a CVC from scratch. I'm a corporate animal, and I've been working for the same corporation for more than 20 years now. And you can see a few of our products in the background. It's called Pernod Ricard. So it's the second biggest wine and spirits company in the world. And we have all the brands you need to organize a big party, from the whiskey with Jameson, the Glenlivet, Chivas, Absolut Vodka, Champagne, all the brands, and you need to organize a great party and cocktails. And so after the business school, I worked for 3 years for Deloitte as in the audit, as an accountant. And then I joined Pernod Ricard because I thought the business was really exciting. And there were some possibility to grow in the corporation, starting from finance role, moving to CFO and running business unit. And this is what they were proposing, and also internationally. And I wanted to move internationally. I grew up in Paris. I love Paris and France, but I wanted to discover the world. And this is what Pernod Ricard was offering. After I joined 2 years after, I moved to Germany as a CFO, and it was a great experience for 3 years. Then I moved to Italy in Milan, also CFO for the market. And then when the group acquired Absolut for 6 billion, they sent me first to facilitate the integration of the Absolut company within Pernod Ricard. I did that for 2 years. And after, they offered me to run a business unit, what we call a brand company. So in charge of a portfolio of brands, global brands, so vodka brands. And it was very entrepreneurial because these were all the other vodka brands than Absolut. So we had Polish vodka like Biberova and many new brands that we created from scratch. So a lot of innovation. And we had to think differently. It was like launching new startups in a corporate. And we had to learn how to do this with very little amount of money to do that. So being disruptive and trying to find new way of doing things. And I think this experience has helped me a lot actually to land into my new role, because after this experience, the group decided to create corporate venture capital. And this is by meeting our CEO one day in Paris. He told me, I would like to meet with you to tell you about your next role. And in the morning, when I arrived in Paris, I thought, okay, he's going to offer me to run a country. And when I met with him, he said, no, listen, here's my vision. And I want to create a venture to invest in new type of business beyond alcohol in our space, which we call conviviality, meaning bringing people together. And it was with the logic of exploration of new business model, especially in services and experiences. So hospitality, retail, entertainment. And so that was part of a broader vision. And they had already thought about it, and they decided to create it in San Francisco. I can come back to the reason why. And he said, okay, we want to do this. It's going to be based in San Francisco. We thought about you. What do you think? And it took me probably 30 seconds to say yes, even if it was not planned at all, because I thought it was spot on with my experience and skill set and what I like. And they identified that I was very entrepreneurial and to do things differently and risk adverse and always looking for new adventure. And this is why they offered me this role, together with the fact that I had some finance background, which they thought was important. And this is how it started. So it's different from your story, Nicolas, but then I arrived in San Francisco and knew nothing about venture capital. I'd never been in San Francisco before. I'd been in the US many times, but I'm in that city. So I had to learn everything from scratch. met great people, and this is how we develop Convivialité Ventures. Over the last 4 years, we made 25 investments in the US, in Europe, and in China. So we have a team on the ground in the US, in China, and in Europe. I can come back to that too. And this is where we are now.
Very cool. And I think one of the person you hinted we know who has been helping us is Paul Holland. And it's quite spooky, but tonight we have a party with him. So very nice. So let me ask about the finance background. So it's part of your education, that's part of your experience. And your CEO believes that would be an important part of the discipline you need to bring into the role. How important is it?
When he told me this, I said, but I don't think it's so important, the finance background, to be honest. And I still don't think it's very important. You can do a great job as investor without a finance background. You need to be comfortable with figures for sure, and business model, and do basic math. It is helpful too if you have some. And also with my audit background, when you go into the details of the deal, into the details of the term sheets, in terms of managing the risk and so on, that can help. But I don't think it's a must. I think it's useful if you have it, but it's not the primary quality, I think, which is required to be a great investor.
How did you design Convivialité Ventures at the beginning to make sure that you deliver this value add? And how do you keep the momentum for the last 3 years to keep adding value and to bring this value in a measurable way?
Yeah, so from day one, we designed it this way with this intention to provide this expertise. But that was on paper. And after, you need to deliver. And actually, it touched the biggest challenge we all have, which is how do you create that connection after the investment? How do you make sure this strategic relationship, this partnership, this connection will happen between the startup and your colleagues, your mothership, and the different business units? And this is the hardest piece. From day one, we didn't want to clearly identify champions where we say, okay, you are the champion for this topic. We will go to you whenever we need something. We much more went case by case. Okay, we are thinking, okay, this startup, they need this. So we decided to reach out to some people and say, okay, we have this startup. What do you think? Is it interesting for you? And most of the people have a great interest when you reach out to them. Oh, I'm looking at this startup. They are doing this. Usually they are very interested. Okay, oh, that's cool. I like it. Then you invest and you call back this person and say, hey, we're investing now. Are you ready to work with that? Well, I have other project. It's complicated.
That's why I was asking about keeping the momentum.
No, but you know what it is. And then we started to realize there is a very cool factor in what we are doing. But if it doesn't fit the strategic objective of a team, they are not going to spend time working with an early stage startup to try to figure out how to build something together. They would say, we do that in 2 or 3 years, but now we focus on something else. So that's just the biggest challenge of a corporate venture, is how do you practically manage to create that magic moment where a startup and a corporate are going to work together and build something amazing. And this is what we learn over time. After a certain time, we took the learning of this. And when we open new country, like in China or like in Europe, we said, okay, we are going to make sure we get the sponsorship of the local CEO, the local team, that they see the value of what we are doing. And we will have clear point of contact that we can go to and work with when we do diligence to evaluate what we can do together and to make sure that after it will happen. So that we have learned and that we are now implementing everywhere. But when we started at the beginning, it was not so clear for us that the best way to do it was to identify this local partner, sponsor we can go to. And that was really part of their objective or intention to work with startup because they see the benefit for it.
Very nice. So now you have 3 teams, 3 locations. How do you keep the teamwork going with different time zones that are not friendly with each other? How do you make sure that your team is thinking as one team? Or actually, do you prefer to have them thinking as each location is their own leadership?
It's a combination of both. They are all in charge of their local investments. And we have not put in place an internal investment committee within the team to vote on where the US team has the right to say on China investment. But we definitely do share within the team what everybody is doing. So we have a global team call, which is a challenge with the time zone, but it's possible. We wake up early here and it's late at night in China and middle of the day in France after the lunch. So it's not easy for them.
That's tough for the French.
But it's very important for me to share, cross-fertilize, first to have a similar approach, how we operate as investor, and also share most interesting deal we are working on. And then we debate on what do we see in that type of business globally? What do we see in the Chinese team? You bring me a topic, we discuss, okay, what do we see in the US? What do we see in Europe around that? So that everybody's bringing some thinking to help to make the right decision. So that we definitely do. I think it's very important. And it makes our CVC pretty unique and very powerful to make the right decision. And also to add value to the startups, because we have this global view on what's going on. So we can say, oh, we see that in China, there is this company doing exactly this, and it works really well for this reason, or it didn't work for this reason. And you see a lot of trends now coming from China into the US too. So it's not anymore only one way. So there is a very strong value in having this global conversation and global view on the business.
Very nice. And I think part of being the eyes locally in different geographies is very high value add. How did you recruit these people who can actually spot these trends? Because that's not the easiest skill to recruit for.
Yeah, it's a good question. I think the skills set that we are looking for is, as I mentioned before, ideally people who have done CVC. So they have both the ability to scout the good startup, and they are investor. This is their primary skill set, and this is what they like. But two, they like to do it in a corporate world. So it's not only for financial return, it's also to create this strategic or partnership with a corporation, and they enjoy also the corporation. They need to enjoy working for a corporation with the good and bad. But to come back to a question, they first need to be investor, and they need to like it. They need to be excited with, okay, it's like when you go hunting and then you say, wow, I'm onto something, but it's really exciting. So I'm looking for people who are excited with being investor, that have that in their gut somewhere.
I think there is a golden nugget here you just said, which is you need to find people who will enjoy the corporation. And if I look at all the CVCs that complain about the corporation, they're not the ones that do so well. So I think having that enjoyment, wanting to engage, and there will be times where it's difficult, but enjoy the corporation, I think is a really good tip, actually.
I have so many friends working in startup, being entrepreneur, that tell me I could never work in a corporation. So much politics, they just can't. My advice to investor is, if you want to work in a VC or CVC, you need to think first, what type of investor do I want to be? If you are primarily excited with finding the company who is going to change the world and the most exciting things with the biggest return ever, that's great. Of course, we all want that. But if you do it in a corporate world, you need to consider, okay, what are we going to do with this company? So if it's going to Mars, okay, are we going to drink alcohol tomorrow in Mars? I'm not sure. So if you are looking for the most exciting stuff, you want to be very independent, and what matters for you is getting incentive and carry and so on, then the CVC is probably not the best spot. If you enjoy the corporation, meaning creating this connection between an exciting startup and a corporation so that the magic happens, then you are ready for the CVC. But this is hard. You need to identify the right people who will get excited with startups so that it makes sense for their job, and then working on creating this magic moment where there is something happening. And this is hard work. In a CVC, it's half of the job from my point of view, so that it's successful.
Very nice. Let's talk a little about KPIs. What do you think are the KPIs that you've defined that was the most helpful for your team to deliver according to your vision?
I think the most important KPI is not the strategic one, it's the financial one.
Okay, say more. This is good.
Because we are CVC, and if you are a strategic CVC, is to create strategic value. And we have a long list of KPI. What is the most important one? I need to think about it because I don't have the one that makes the whole difference. There is maybe one is, with how many startups have you done a partnership? Yes, probably that's the most important one.
That's a meaningful one.
That's a meaningful one. But it depends what type of partnership too. But that would be the most important one. But on the strategic piece, the most important one is your portfolio doing well? Are you going to give return to your mothership? Because if we don't do good investments, one day we will have an issue because they will say, you can explain all your long list of strategic KPIs. People will say, yeah, it's great, but it's not good enough for me. While if you have first a good return on investment, good ROI, then it's your insurance, I would say, to last as a CVC and make sure that people recognize the value. At the end, it's about making money. So how do you make money? As investor, we make money with the return we give back. So we don't compromise on this. We don't compromise. When we look at a startup, even if we are super excited strategically, if we don't believe we can get a good outcome financially from our investment, we don't invest.
It doesn't mean you don't introduce it to the mothership.
We do, of course. We never close doors, of course, because what we think today might be wrong tomorrow. So we create the connection if we think it makes really sense. And it's a good way also to learn about the startup and working together. And we keep the door open for the next round. If we're not convinced, then we prefer to wait.
And as a finance guy, I think what you described is the difference between being perceived as a cost line or a profit line. And the discussion is very different.
It's very different. And it's a good point because so many times people say, how much money have you spent? I say,
yeah.
It is not spent. You spend money in marketing and all this stuff. How do you measure your return on marketing investment? No, it's not spent. It's an investment. And it's, oh yeah, it's true. And then, okay, you expect a return on investment. So we are primary investor. We are primary venture capitalist, but we are corporate venture capitalist, which makes our job very hard, to be honest, because we want everything. We want the return, the financial return, and we want the strategic benefit.
But let me challenge you. Is that not correlated? Let's say the top 3 financial returns of your 25 portfolio companies are the ones that are going to outperform everyone else. Are they not the ones that also bring the most strategic value to your company?
Yes, it's completely true.
So at the end, it's about picking the winners.
It's about picking the winners. But I do have an example of winner in our portfolio where we have not really managed to create some strategic value yet, even if it's obvious what we can do.
But is it a question of time or is it a question of relationship or?
It's a question of time. It's a question of internal setup also. It depends by region on the sponsors or depends on priorities and so on. So it's a question of time. That's what we think. But you are right. If you don't invest in the right company, there will be no strategic partnership. So you need to find a winner anyway.
Yeah, I think no one will have a problem to say that if you invest in the losers, you're losing. That's for sure. Let me talk about portfolio building and the strategy behind building a portfolio. So now you have 25 companies in your portfolio. How did you build it so that you touch on many parts that are important for Pernod Ricard?
We map spaces that we're interested in before investing. So we have a roadmap. We work with many colleagues also internally looking at the cultural foresight team. And so we try to develop point of view on where the world is going in our space and the space that are the most interesting for us. And then we do deep dives. And then, we drill down into some spaces, analyze all the company and then reach out to them. So this is the main way. But of course, we have naturally a deal flow that comes from our network, even from spaces that we were not thinking so much about. This is how the deal flow works. But there is this constant work of identifying spaces, working with our colleagues and say, what are your key strategic challenges? What are the spaces that would be the most relevant for you? And then we build our thesis like this, where we say, okay, these are the spaces we're interested in. And doing this deep dive, and I know you do that too, it's very valuable for us as investors, but after we share it also internally with our colleagues to bring some tangible value to them.
Very nice. So what's next for your portfolio? I'm not going to say your strategy for investment, but how do you see Convivialité Ventures in 5 years? Very high vision.
I think the main challenge of a CVC is to still exist in 5 years. The cemetery of CVC is pretty important because crisis, change of management, and so on. So I think, one, we still want to be there and having more impact for Pernod Ricard, which means investing more and more geography and with a broader thesis. So we started with B2C. We have started to invest in B2B business. Basically, we want to be here to help to solve the most important strategic challenge we can have, where we can't find internally the resource, we can't create it. So we partner with great startups who know how to do it. So we want to be the go-to for this. We don't know how to do it, then we need a partner. Okay, then we can help. We want to be the go-to for finding the partner in the most innovative spaces where we can create this partnership and in the same time make an investment.
Very nice. Thank you for the candid and transparent answer. That was really nice. Let's move to something very practical. You're a very small team. How did you build your investment committee? Is it a team that's outside, or is it mixed with you? How did you build your investment committee so that you can be responsive for investment decisions?
So our investment committee, we have the top executive of the group, which is maybe not so usual, I don't know, with our CEO. And he's the one who asked me to do it, and he's still very interested in knowing what's going on. So we have regular meetings, it's in the calendar with them. And when we need to meet with them more, then we create some ad hoc meeting and they find the time for that, which is great. It's short, we don't have a lot of time to sell a topic, but they know we need to move fast and they are super fast to answer. And even sometimes with an email, it's in 24 hours to respond. So
that's very impressive. And I think you're right. It's part of the design. You have to make sure you can make decisions fast when you need to move fast. I want to finish on what we said at the very beginning, which is identifying how big an investment, a startup can be. How do you get a feel for that, how big it can be? Because you can always say, oh, it will be IPO and $100 billion, but that's not true. So how do you assess and validate and challenge on the how big it can be?
The first is the gut. I'm sorry to say it, but that's what it is. And after, you need to rationalize it and understanding how big is this problem, and is it a massive global problem? How big is the market? If the market doesn't exist, how big can this new market can be? So it starts from there. And I think it's from the conversation with the CEO, listening to his vision, that you get a sense of this too, because it's a combination of how big is the market, what is the product that you want to build, and can this team do it? And this is how you get the sense that this is the winning team that sits on something that can be really big. So we spend some time to think how big it can be, but we spend also some time, and that's more maybe my CFO part, on how small it can be. It can, of course, fail, but it's also an arbitration between how big it can be and how wrong, or what is the worst case, especially for a startup that is in a growth phase where you see a trajectory. So we always dream about how big it can be, but we think more, okay, what do we think it will be? And what is the low case? So that this is how we build our comfort that it's worth to play and even put more money, because it's relatively not safe, I would say, because it's always risky, but it's a good bet. And if it works, then it can be magnificent.
I think when you mentioned the gut, I have a feeling that it's also the gut on your confidence for the entrepreneur to make it successful.
Exactly.
Great. It's a really good way to end on the entrepreneurs and your gut for them to succeed. So thank you, Stéphane. Merci beaucoup.
You're welcome, Nicolas. It's always a pleasure to engage with you and share our best practice.